what I want to discuss with you today is something that I get a lot of questions about. Probably the most common questions I get asked is about mistakes in the market. And so I want to discuss with you guys about mistakes, how to avoid them, and what are you doing with your own trading to help you take your game to the next level. So I always love this quote, by the way. You have to prepare to win before you're able to win, whether you're an athlete, whether you're a CEO, whether you're in your own business, whatever you're doing. If you don't prepare for what you're planning to do or what you want to do, you're probably not going to do well at it. So when we're in trading, it's no different. It's a business. If you go in without being prepared, there's a good probability you are going to be wrong or make mistakes. Okay, so common trading mistakes, and I always love using the little quotation marks, those air quotes. So, do you have a friend making these common mistakes? Huge problem I always hear is risking too much capital. Ralph, I lost too much money. Well, how much did you invest? And they tell me, and I realize, well, you realize that's 20% of your account in that trade, or 30% of your account in that trade, folks. You've got to be able to quantify your risk, and you have to be really cautious with how much you're putting out in the market. Do you know where to set your stop losses and targets? Begin with the end in mind. It's a great quote. Know what you're expecting out of the trade, so that way when it happens, you're not surprised. You ever notice that you make a bad decision when you have fear in your head? Adrenaline's pumping, you get into a car accident, you kind of panic. So what happens in the market when you're panicking? You make bad decisions and you get into an accident. If you begin with the end in mind, you'll have an idea of what could happen, and when it happens, you're not surprised by it. So we talk about stop losses, we talk about targets, we talk about if it goes against us, when do we get out? Losing money and don't know what they did wrong. Always happens. I'll get a phone call or an email. What did I do wrong in this trade, and how would I fix it? That drives me absolutely insane. Because fixing bad trades a lot of the times is a bad idea. Okay, we'll get into that as well. Risk-reward ratios. Are you risking $1 to make $1? So think about that for a second. Do you put a stop loss in place of $4, but you're projecting to make $4 on the trade? So that means that every trade you're doing, you're 50-50. You might as well just flip a coin. Trade plan. Do you have one? And don't be a one-trick pony, okay? Know several strategies, okay? Folks, you are trading against professionals. So think about it as a professional. Think about it like a Michael Jordan, like a Phil Mickelson. They've got coaches to help fix their flaws in their game. And if you ever heard quotes from Michael Jordan, he talks about how many times he took the winning shot at the end of the game and missed, but he will still take it, right? If you've ever hear from Wayne Gretzky, why he was successful is because he went where the puck was going, not where the puck was, right? If you hear a chess player, it's knowing 3 or 4 moves ahead. So what we're going to get into is you are a retail trader. You are trading against professional traders. Who is helping you? What are you doing to make sure that you go out there and are able to capitalize on the market, whatever's going on in the market, up, down, or sideways, and distill all the biases that are out there? So there's the leverage of trading options. I'm not sure how many of you out there are trading options. One of the ways to kind of reduce the amount of risk in your trading is to trade options. Options are less risky than stock. I'm not sure how many of you are options traders, so depending on the audience, this could be a little more of a in-depth discussion or not. But a lot of times people don't realize that they can use options in their portfolio to reduce risk. You've been told that options are actually more risky, and that's actually completely the opposite of what the truth is. Truth is that options are less risky than stock. It's less money out of pocket. So if you have less money at risk, you have less money to lose, right? And we're going to go into a few of those examples as well, okay? A lot of the times, if you can read through this, buying an option, it really is just buying a contract. giving you the right but not the obligation. So it's kind of like seeing a house that you want to buy, and you make an impulse decision and you write a $5,000 check, you give it to the owner and say, I want to buy the house, let's go to contract. And then you go home and your wife says, what are you crazy? You know, we got to look into this. And then you look into it and you realize that the house isn't what you want and you cancel the contract. Okay? Well, you didn't exactly have to buy the house, okay, and you were only out a small amount of money. Okay? Conversely, let's say that house was worth 3 times what the seller is getting rid of it for, and now you have that right. So there are, a lot of things that we can do with options, and a lot of times I'll use that 10%. We can always look at things that have 10% of the underlying stock value. You got a $50 stock, we're looking to buy $5 options. So instead of putting $5,000 out of pocket, we're putting $500 out of pocket. Again, using leverage to our advantage. So when we're wrong, that whole idea of aim small, miss small, when we're wrong, we want to lose a small amount of money. Okay? This, folks, please, if you got a pen, just write this down. Okay? This is a mantra that I've been using for a long time. I use it on my trades. I use it with my coaching when I'm coaching. I use it in my classes. I use it on my when I'm giving someone a trade plan lesson. If you don't have a plan, then you're planning to fail, right? So what I believe in is having control over what you can control and leaving everything else out to just be left alone. I can't control what the market's going to do, but I can control my risk. I can control how much money I put into a trade. I can control when I get in, and I can control when I get out. But I can't control what happens as soon as that bell rings, correct? So plan your trade and trade your plan, okay? It's very important to know, again, going back to, and a lot of these you're going to see are dovetailing into each other, folks, knowing what the outcomes are so you're not surprised when it happens. So I created this test principle. Test, target, entry, stop, time frame. And my trading is going to utilize this with you guys so that when you look for a target, what is your projected move? Look at your entry. At what price do you want to get in? Stop. How much money you're willing to lose, and time frame. How long do you want to be in this trade for? If you can write those 4 pieces down before you get into the trade, then you're already giving yourself a leg up because most traders don't even have a trade plan. And this is a huge one as well. Don't risk $1 to make $1. You ever think about that for a second? People always tell me, I'm looking to make $4 on this $50 stock. Okay, and you've got a $4 stop loss. Great. Why don't you just flip a coin then? What do you think the average trader, percentage-wise, is right? The average retail trader is right less than 25% of the time. If the average trader goes out and makes $1, and risks $1 to make $1, and they're pretty much right, let's even say 25% of the time, are they even giving themselves the possibility to make money? Think about that for a second. Most traders are wrong, but they'll risk 1 to make 1. Right? So I want to bring up this PowerPoint slide, this Excel file, because I created one. If you do 10 trades, okay, and I'm sure you're going to do 10 trades, and you basically are risking $1 to make $1, that means if you're right 50% of the time, you're going to make $5, and when you're wrong, you're going to lose $5. What's the point in trading if that's the outcome? Okay? When I'm taking directional trades, folks, I will never, ever trade 1-to-1 because I know statistically I'm not right 50% of the time in my trades. Okay? So what I'm looking for and what I tell people to look for is I tell people, hey, you know what? Change the paradigm. Shift your thinking. Look to reward 3 and risk 1. Okay? So instead of a 1-to-1, for every $1 I'm going to put out there, I want to make 3. And guess what? With options, I find these all the time. So think about it now, folks. If you're right 30% of the time in your trading, because I'm not asking you guys to become professional traders, all right? I'm just asking you to control what is in your capabilities, stop losses and targets. okay? And if you can risk $1 to make 3, and you are right only 3 times out of every 10 trades, you still have a winning month, right? You still can make, think about this, if this is $1,000 and you can scale it up, if this is $100,000, whatever it is, on $1,000 at risk, you made 900 and lost 700, and you walked away with making $200 on 10 trades. Is that great? No. Okay, but $200 on $1,000 or $2,000 on a $100,000 account is 2%. And if you're doing 2% on your monthly trades, you're doubling your account every 3 years, sorry. So think about that for a second. I'm just talking about starting small, right? Forget about all the other things that we can change, but just changing the things that are in your absolute control. So when we talk about risk reward, stop risking $1 to make $1 and demanding from the market that you be right better than 50% of the time. Be willing to be wrong more than you're right and be able to make money in your account. My goal is just a little bit different than this. Okay, sorry, I slid this over. Just a little bit different. I'm okay with being wrong, and it's really a little bit less than this 40%, you know, but on average. But let's just say it's 3.5 to 6.5, right? So think about that, folks. Every time I am winning, I'm giving myself a higher probability of moving the needle on my account. I'm not interested, just to make sure everyone understand, I am not interested in and I don't have a bazillion of these gigantically huge trades. I am a trader that looks for consistency. I look to be around long term. I look to trade for a lifetime, and I am not hyped up on a 1 month gigantic windfall because I over position sized. I threw a ton of risk or the caution to the wind, and I just went crazy for 1 month. I am much more consistently looking for this type of strategy. Okay, and when I can get this, I'm thrilled. So when I can make small changes to a lot of traders to get them to change their thought process, and we trade this way in our coaching every week, and just dropping in trades that makes the most sense for the market that we're in. So we analyze the markets, and we look at what we can get, and then we place our trades. So when we look at this don't risk one to make one, I hope you guys can clearly understand, you know, some logic behind why that's an absolute paramount part of your start process to placing a trade. And that's just directional buying stock or buying calls and puts, okay? I'm not talking about little more of the advanced strategies of selling strategies. That gets a little bit different. The higher probability trading strategies that I do as well, they have a little bit of a different piece to that, okay? But again, not risking one to make one. It's absolutely critical, okay? And so what I want to show you is a little bit of, we're going to dovetail a trade that I actually put on in the coaching that we've done, and show you a little bit of the flavor of how this actually works, all right? If you were to buy stock, if you were to buy it in an IRA, so whether or not you're using margin or not, and the amount of money we're looking to make, okay? So with this trade, leverage-wise, we're looking to buy a call option, or we're looking to buy the stock. So when we're thinking about leverage and we're thinking about risk, folks, what's more risky, $65 per share or $11 per share? Okay? So if you're an options trader, you already know that trading call options are much cheaper than buying the stock. And the windfall, the profit, we're looking to make $4. Well, when this move actually happened, and it did, we made $370. So I'm sorry I made $30 less, but I also used a fifth of the size, or 20-something% of the actual amount, okay, with this trade. So when you think about these things, you start being smarter with your money. You start stretching that dollar. You start thinking, how do I effectively and efficiently trade the markets? One of the ways, reducing capital, reducing risk, stop losses. We look at how we can basically place these trades and put the least amount of money out of pocket.